So what happens after you make an investment? Now it's time to track your portfolio. The way to do that is you have to log on to your Republic account, and in the drop down under your name, there will be a My Portfolio button. And it's a good time to mention that when you invest in a company on Republic, you receive an interest in a company in the form of a security. A security is essentially an agreement with financial terms between you and the company. It represents your financial interest in the company. So if you go, assume I just drill down to my portfolio. So next slide, if you can. Great. This is what you see if you drill down into the My Portfolio page. You'll see that this particular investor have made an investment of $250 into Avrani CrowdSafe. Now, if you went to view my investment, which is going to be the next slide, you will be able to find more information, specifically of what your investment details are, how did you pay, when it was settled, and whatnot. So now that you made your investment and know how to track your investment on your portfolio page, it's time to monitor your investment. And I'm looking at the Q&A and the chat section, and many of you have a lot of questions about monitoring. So you are investing through Republic, you're investing in private companies. So private companies don't trade on the exchange, they don't have daily pricing. However, what most private investors do to estimate the value of their holdings is they monitor the valuation of subsequent fundraising rounds. So for example, Avrani raised on Republic at a 10 million valuation cap, which Tundi walked you through. And let's say that this company goes on and raises their next round at a 60 million valuation. That means that the company grown, so it's good news for the stakeholders. Additionally, to help you monitor your investment value, most portfolio companies will share updates with you on their progress and talk about their big milestone, new customers they have gotten, new fundraisers they have received. And for that to be able to get those updates, they will either directly email you, or you will be able to also see them on the Republic deal page. And addition to that, I personally like to follow companies in the news. Crunchbase, some of you asked what is good resource for startups. Crunchbase is one that is very helpful. And I also like to look at their social accounts just to see what is the traction, what is the type of conversations they are having. We also see a lot of questions about whether securities could be sold. But please note, these are private securities, and the private market is not a liquid market at this time. We are certainly looking into creating liquidity, and a lot of other companies are looking into creating liquidity in the private market, but it is not a liquid market at the most part. In other words, there are no way to easily sell your securities. So the answer really is whether you can sell your securities is generally not. Now, there are a few ways you can transfer your securities under special circumstances, and you can read more about that on our website. We are happy to share the link there. So then the real question is, how can you cash out? Ultimately, you made the investment, so then you make money. Of course, supporting a founder, supporting a cause is all great, but most of the investors, including myself, are looking to make a return. So how you can cash out will highly dependent on the specific terms your investment is structured. Again, this is something that Tundi went over. In the case of Avrani, they have a CrowdSafe. But typically, so in summary, how I would look at this, typically you will be able to cash out when a company is acquired or they go public, go through an IPO. But in some examples, the founders have the right to repurchase their holdings at a premium. So for example, one of our companies on our platform had more of a debt type of security, where they fulfill their security obligations and repay the debt at a 50% premium. So in other words, if you invested $100, you got back $150 actually just a few months after your investment was made. But one thing that we must mention always when it comes to investment, sadly not all companies will make to acquisition or IPO, and you may lose the money you have invested. That is why it's so important that you do your own due diligence and follow your research and your instinct when you make your investment. A last thing that I would like to mention here is investment horizon. So the deals and companies on Republic like Avrani, they are in the beginning of their life cycle. So a lot of early stage investors, VCs, count that the average exit for their portfolio will be somewhere between 5 to 7 years. So once again, invest what you can to not miss for the upcoming years. Again, average investment return is 5 to 7 years.